Hello there, this is the Bookkeeping Master on YouTube. Welcome to this video. Thank you for taking the time to view this video and thank you for clicking on the link to this video. This video is all about control accounts. I'm going to teach you the basics of control accounts. There's a bit of material to go through, so it could be that the video is split into two. So this could be part one and there could be a part two. If there is, I'll put a link to the next video in the description below the video on YouTube. So control accounts. I'm going to cover the basics. If you have any questions about control accounts, then just put something in the comment section below and I'll reply to you. I usually check my comments every 3 or 4 days, so it may be a few days before I reply to you, but I do reply or try to reply to everybody. So control accounts. To understand control accounts, you first need to understand debits and credits. I don't plan on going through debits and credits in too much detail. If you're unfamiliar with debits and credits, then I do have other videos purely focused on debits and credits. If you just go to my website, which is freebookkeepingaccounting.com, that will just load up. So if you go to my website, there's lots of free accounting videos that you can watch and learn the basics of debits and credits. I've made that a bit bigger for you. freebookkeepingaccounting.com. It's just loading now. We'll come back to that if it loads up. But I want to go through debits and credits because it just provides a good refresher. It may help you understand control accounts a bit better if you have a quick refresher on debits and credits. Here we go. So if you just go to my website, under popular courses, free accounting basics, you can go to that link. That should help, and there should be some videos specifically for debits and credits. My free bookkeeping course too. If you click on that, there'll be a link for videos about debits and credits. So just a reminder for debits and credits, your debits are things like purchases, expenses, and assets. Credits are things like revenue, liabilities, and sales. Now the easiest way to remember this, or I find the easiest way to remember this, is PEARLS, and I've spoken about that in previous videos. I've mentioned it. So PEARLS, P-E-A, got P, and then R-L-S, and there we have it, PEARLS. So here are debits, and here are the credits. So if a business was to buy, say, a computer, that would be an asset for the business. It would be recorded on the debit side of the accounts. If the company has a sale, say they sold £100 or $100 worth of product, that's a sale, that'll be entered as a credit. And we also have purchases and expenses and revenue and liabilities. So if the company took a loan out, that loan is a liability. It's money that the company owes. That'll be recorded as a credit. So going over to my next tab, cash sale and cash purchases. So just another refresher for debits and credits, and also as an introduction into control accounts, because this will help you to understand control accounts better and help you to understand why control accounts are needed. So in example one, let's say a business makes a cash sale of £100. So the debit and the credit. So going back to debits and credits, we know that credits include sales. So the sale of £100, we'll go to the sales account, which will be a credit entry. The corresponding debit, it depends on, I said cash sale, but it depends if it was paid in cash over the counter or if it was paid immediately by card into the bank account. Let's say it was paid by card, so the money would show in the bank account. So you'd have a debit, bank, credit, sale. So let's do another one. Business makes a petty cash sale of $10. So once again, we have our debit and our credit. The debit will be petty cash. The money becomes an asset, which is a debit entry. You can't quite see that. Let's just make that a bit bigger. And then the credit is sales. So credit sales $10, debit petty cash $10. So each time we have our asset and with the sale, debit, asset, credit, sales. And let's just go through a couple more. So business purchases asset of £500. We need our debit and credit. So let's go back to here. So assets are debit. So let's put that in here. So computer asset. And then the corresponding credit depends how we paid for it. But if we paid from the bank, which is the most likely way the computer was paid for, it'd be money out of the bank, reducing the assets. That's a credit. And let's just do one more, a nice simple one. Business purchases stamps £5 or $5 with petty cash. So what's the debit and what's the debit and the credit? Just have a think about that before I write it. See if you can work that one out in your head. If you can't, then perhaps it's worth taking one of those courses that I suggested at the beginning of this video, because it may be that you need a refresher on debits and credits. The more you understand debits and credits and those basic bookkeeping principles, the easier it will be to understand control accounts. So the debit and the credit, let's just have a look at the tab. So expenses are debits. So the stamps would go probably into like the stationery account, office expenses, something like that, or admin expenses. But I should put office expense, so £5, and then the money comes out of petty cash, £5. So just some very simple, straightforward debit and credit entries with 2 sale examples and 2 purchase examples. So let's move over to the next tab, which is control accounts intro. So an introduction into control accounts. So these examples are all fine. If we're buying or selling within the business and it's all cash purchases, cash sales, then that's fine. The money comes out of the bank and we account for the expense or the asset using what I've gone through on this tab. It's pretty straightforward. But what happens when perhaps you buy something on credit or you sell something on credit? So going back to example 1, business makes a cash sale of £100. So business makes a cash sale of £100. Let's say that the business didn't make a cash sale of £100 and it actually had a credit customer who pays on terms of 30 days. So let's do the debit and the credit. Let's actually make this bigger. I want to make sure you can see this. Okay, so business makes a cash sale, £100, but it's not a cash sale, it's just a sale to a credit customer of £100. So how do you account for that? Well, we still need to record the sale, which is a credit. So I'll put that in. If you hear any banging around, I do apologise. It's the summer holidays here in the UK and my kids are off school and I'm working from home today. So you still record the credit, which is sales, but where does the debit go? Because this £100 hasn't got into the bank account. It wasn't paid in cash and gone into petty cash. What do you do with the debit side? Let's just have a look at another one. Let's do that nice simple petty cash purchase of stamps. So business purchases stamps. But this time, let's say we have like a tab with our local newsagent or post office, whatever it is, and we're able to purchase stamps on credit. So debit, credit, debit and credit. So what do we do here? We're looking at the other example. We had to record the office expense, which was a debit. So let's put that in. But we haven't physically paid for the stamps. So what do we do with the credit? What's the corresponding credit? There always has to be a debit and a credit side of transactions. So what would you do with the credit? No money has exchanged hands. So what do we do with the credit? Let's just have a look at another one. I don't want to go into too much detail here, but let's say we have to pay sales tax. So here in the UK, that's VAT. It may be called something else depending on where you are in the world. But let's say we have a sales tax, and every time we sell something, we have a sale, a portion of that sale has a tax that we have to pay. But the thing is with sales tax is you don't pay it instantly. When you make a sale, you don't say, well, this money's for me, this money's for the tax man, and he takes it that second and we account for it. Where does it go? What's the debit and what's the credit? Now, the purpose of me going through all of this is not to confuse you and try and make you come up with answers. I don't expect you to know the answers if you know nothing about control accounts, but it's to help you to understand why we need control accounts. And this is generally, or these two are generally the main reasons why you need control accounts, is because businesses buy and sell on credit, or they don't always pay instantly. There's some delay in receiving goods and paying, or making a sale and the customer paying. So we have to have control accounts to monitor that. First, to know how much is outstanding by how many customers, or how much is owed by us to our suppliers. So that's one way, or one reason why we need control accounts. And then the other reason why we need control accounts is to account for everything properly, to record financially what is happening in the business. So let's pause the video there. That's part one. I suggest that if some of this has gone over your head, perhaps just start from the beginning and go through the video again. In part two, we'll start looking at control accounts in more detail. I'll speak to you again shortly. Thank you so much for watching.